There is certainly nothing wrong with swinging for the fences on speculative plays. I do it myself quite often, but I always try and analyze the risks of swinging for the fence and manage my risk by managing my investment size or the position size in the trade. And we have a big problem in the retail community, very obvious to any of you who've been trading retail stocks, meme stocks, momentum trades, short squeeze stocks over the last 4 years. That problem is if you bring up the financial statements, a 10Q, risk factors disclosed by the company to you in those filings, you get labeled. You get labeled with ad hominem attacks from the promoters of these stocks, calling you a short or saying that you are short or you're getting paid. And I want you guys to recognize these attacks for what they are. They are manipulative tactics that stock promoters use to get you on their team and to avoid any meaningful discussion, any meaningful due diligence talk about the stock. They only want you focused on the most positive outcomes with zero meaningful discussion on anything else related to that company or the trade. And I think that is unfortunate. We've seen in many different tickers, the ones that I've covered, GTII, MMTLP, BBBYQ, BBIG, just to name a few tickers where I weigh in with a couple of thoughts, hoping you guys make money, reminding you to take an exit if a run-up happens, and those run-ups always happened in every one of those tickers. And then people fell under the spell of these stock promoters with non-evidence-based hopium speculative prices that they put out, these pie-in-the-sky prices, and then these people lose all of their money because they're not analyzing the risk and they're not sizing the size of their trade to the risk. And that is unfortunate. And so that is kind of the lead in to how I got dragged into looking at Railtown, ticker RLAIF, a very cool looking AI play, a penny stock, a non-revenue company. Let's dig into what is the bullish case here. Looking at Railtown, a potential acquisition of a larger company called AIP, AI Partnership, and how people are looking at this trade. What is good about this potential acquisition, and what do the promoters of this stock not want you to talk about? What do they not want discussed, and why don't they want that discussion? Why are they so, I mean, literally, they will have 5-hour live streams attacking me for just doing some basic due diligence stuff with you guys. And I want to call that type of manipulative behavior out for exactly what it is. An attempt to manipulate you and take your mind off of risk. Maybe you'll make $1 million in Railtown. I don't know. I don't know what the outcome of this acquisition is going to be. Maybe you will make $1 million. Maybe you will get substantially diluted. That outcome is uncertain to me, and whether you decide to invest in the trade or not doesn't matter to me. But I do think there is value in having some discussion about what are the risks on the table, not just what are the pie in the sky dreams. Those are fun. I like to dream about that too. There are some risks that I think, for myself, being someone who looks at risks, there are some that are preventing me from jumping into the trade. Although if someone promoting this stock could give me a meaningful answer, maybe I would get on board and throw some money in the Railtown hat. Let's dig into today's presentation on Railtown and AIP. I have done very little coverage on Railtown. I think about in the last 2 months, maybe 8 tweets and 1 video. And the video was not bad against Railtown. It just asked one simple question: how does this Railtown AIP acquisition get done? And it's been 2 weeks now, and nobody has attempted to answer the question, although I have been subjected to daily 5-hour live streams where people attack my character, tell you that I'm short or I work with the shorts. All complete bullshit, hogwash, lies, manipulative, deceitful tactics to get you to not listen to someone asking questions. And hey, there's nothing wrong with asking questions. I'm not against Railtown. I think the management of Railtown and AIP are both sharp professional teams. The product is good. The sector AI is good. I understand the company and the product, believe it or not. I at one time was a certified Scrum Master, and if you're in software development, you know exactly what that is. I've talked to Railtown's investor relations team now. Thanks to them for getting back to me. And look, I'm not against this play, but I have some questions, and that should be okay. We should be able, as adults, to have discussion, due diligence. Remember, do your DD and share it with others. I don't know why asking a question is so frowned upon in different retail stock communities, but you should notice when someone is trying to shut down discussion and divert you to an ad hominem attack instead of answering the question. You should notice those behaviors, and those behaviors happened in, as I said, GTII, MMTLP, BBBY, BBIG, many of these tickers promoted by the exact same people that are promoting Railtown and exhibiting the same behaviors every single time for years. I want you to notice these patterns. And to those people, hey, I'm always available to have live one-on-one discussions with you, offline or online, so you can get comfortable that I'm just a retail trader, just like you guys, one that wants to make money, one that wants to see you make money, but one that has also recognized that over the years, there are way too many people investing money in these companies without doing any risk assessment or risk management at all. And if you don't want to look at risk, that is fine with me. But how many people do you know that have been complaining now for 1, 2, 3, 4 years in these stocks because they lost all their money and now they want to blame somebody else? That is the category I don't want to see you fall in. Someone who failed to understand risk, failed to fully analyze the trade and what was going on in the trade, and then failed to take action when things changed in the trade. Like I said, I trade a lot of momentum and retail meme stocks, and I analyze them every day. And I might change my ideas or my thoughts about a trade, and I might enter it if things turn positive, and I might exit it if my DD leads me to believe that the trade is not going the way that I thought that it might. And for some reason, that makes people mad. If you get into a trade late, it makes them mad. If you exit a trade before they do, it makes them mad. You know, I don't really care about other traders' feelings. I'm trying to protect my capital and protect my investment and buy cheap, sell into run-ups, rinse and repeat. And I'd like to help educate you guys how to do a little bit of risk assessment. So let's dig into what I like about Railtown, what I like about AIP, and what is, again, the DD question that no one wants to talk about. It's like this electric third rail that no one wants to touch. I'm going to talk about it, and I'm going to encourage you guys to force discussion about this because it will help you understand the risk. Maybe those risks will be completely unrealized. Maybe everything will go perfectly, and I certainly hope so. But if they don't, there is substantial risk that you could lose some or all of your investment. I titled this video, Will the Railtown AIP deal get done? Because there have been a couple people in the last couple weeks that have expressed their doubts to me since the deal was announced back in February, and now we're almost 6 months after the announcement date, 5 months after the announcement date, that maybe the deal won't get done. I'm not contemplating that. I mean, that is a risk, but the real question that I asked 2 weeks ago remains my primary question, and I'm not going to sidetrack the discussion asking, will the deal be canceled? I mean, it could, that would be catastrophic, but that is not what I'm worried about. I am just asking the question, how will the deal get done? I see a lot of evidence that it would be good for both AIP and Railtown to get this deal done. And I've seen nothing but communications from both companies that they are moving forward with figuring out how to get this deal done. And we're going to talk in this video about why I think it is taking so long. But before we do that, I just want to, in the interest of fairness for the people that are long the ticker, cover a couple things that I like and a couple of high-level threats and weaknesses of these companies. So we'll look at a SWOT analysis. And if you guys have been in management or taken any management classes, you're familiar with a strength, weakness, opportunity, threat type analysis. And, maybe if you have been in finance, you might have also looked at something like a 5 forces analysis, which could be another way to analyze Railtown, but we're not going to go into the 5 forces analysis today. We're just going to keep it simple. This is some good analytical techniques for you guys to use if you're going to be in a trade for a long time and not just look at the financials, but look at a more holistic approach to analyzing risk. Let's talk about the SWOT analysis. What do I like about Railtown? Solid management team, same for AIP. It's a timely niche. AI is very popular right now, a lot of money pouring into it. And I certainly get the allure for looking at this trade or being part of it. Railtown has a good product, a unified platform that does a lot of things that competitors aren't currently doing. And it has some good, strong strategic partnerships. Weaknesses of Railtown is still an early stage company. It's got limited market penetration, only about 1,150 users on the platform, according to Railtown's monthly filings. The company has no revenue, even though they have users and their product has been able to generate revenue for several years. As I talked with their investor relations, they said, look, we're not trying to generate revenue at this early stage. We're taking a more strategic approach, and that is perfectly fine. But they are a no revenue company, and that is why a couple months ago I pointed out that they have a going concern warning, because when you don't have revenue, you're going to need to raise capital somehow, and that is typically done through dilution. And we've seen one already since I mentioned that back in June. We've seen a equity raise, and there will be more. As long as the company doesn't have profits, there will be more. So that is a weakness to be aware of. Software development can be capital intensive, which ties into what we just said. Opportunities for Railtown. AI is a growing market. By the numbers that I've come up with, $4 billion just in the segment that they're in, a $4 billion market for developer tools. And AI as a service, even broader, $7 billion. Threats for Railtown would be that this is an intensely competitive environment. And right now, some of the major potential competitors are actually Railtown's partners, that being GitHub, Microsoft. But GitHub or this other competitor I have here listed, JetBrains, if they ever decide that they want to develop the niche that Railtown's in, look, these are massive companies. GitHub Copilot having 15 million users, JetBrains having millions of users compared to Railtown's 1,150 user base. It's very easy for these companies to develop out the same technology, or maybe they buy Railtown, which could be cool too, right? I don't know how it's all going to play out, but these are a lot of different moving parts to think of. And the only thing I hear Railtown promoters saying is Railtown's definitely going to get bought out. Maybe not. High R&D cost is a threat, and economic sensitivity, that kind of affects all companies. If the economy goes in the tank and companies ramp down their spending, then Railtown, being a supplier of software as a service, could be impacted. You try and think about everything, and then you figure out what are the real strengths, what are the weaknesses, what are the opportunities, and what are the threats. Sorry for wasting your time going through all of that, but I just wanted to let you guys know I have done a lot of research into Railtown. I don't hate the company. Like I said, I think their product's pretty cool, and the management teams of both Railtown and AIP seem competent and professional. One of the best OTC plays that I've looked at in terms of management teams. But let's get into the real meat of this video, a little more in-depth discussion about what we talked about 2 weeks ago. How will the Railtown AIP deal get done, assuming that it goes forward? In the video 2 weeks ago, I did kind of a broad discussion about all the possible ways that a company like Railtown with very little cash, let's say under $2 million, and no revenue, could buy a much bigger target like AIP, which according to some has revenue in the $400 million range. I don't know if that is true or not, but that is what they say. And we're not going to talk about all of these today. We're going to drill into a couple of them. The dilutive reverse merger one highlighted in red here, and then the third-party financing highlighted in blue. Let's drill down into the two most probable outcomes. And I think I might have even probably got my percentage chances here incorrect. So I want to talk about them not in terms of probabilities, but just as these are the two most likely outcomes. Which one it will be, I don't know. And again, the point of talking about these two potential outcomes is to understand them, and then you can properly weigh any potential risk. Maybe the market will be so excited about this acquisition that the market cap just goes through the roof, and how the deal got done doesn't matter. That is what the promoters of the stock are telling you. And I take a more cautious approach because a lot of you have, I see you on the live streams on these other channels saying you've got tens or even hundreds of thousands of dollars invested in this no revenue penny stock on the belief that this outcome is going to be transformative. Maybe it will. I pray that it does. But there are things that happen in an acquisition like this when the acquirer, Railtown, has no cash and no revenue. You have to ask yourself, how are they going to buy a company with $400 million of revenue? That is a reasonable discussion, reasonable thing to ask yourself and ask the promoters of the stock. The companies are not going to divulge this stuff. So all we can do is think about it until we get a letter of intent, at which point I think, some more of these details will become apparent to everybody, and then we can have a more meaningful discussion. So everything I'm talking about here is theoretical. This is just me brainstorming. There's no guarantee that anything I have on here will be correct. But based on talking to some very smart people, the ones that are willing to have a discussion, I'd like to bring in the people that believe in this stock. Join the discussion, share your thoughts based on initial discussions and my own thinking, my own research. These are what I think are the two most probable ways that a deal like this AIP acquisition could get done. The first one just being a reverse takeover by AIP, in which Railtown, they got nothing to bring to the table other than stock. They issue a ton of stock to the current holders of AIP. AIP is a private company, but there are investors, and to buy them out, Railtown could issue a ton of stock. And that in effect means that the current investors in AIP become the majority stakeholders in this new entity post-acquisition. And if you are holding Railtown right now, you will be massively diluted in a reverse takeover. You'll become a minority stakeholder, and AIP investors become the majority stakeholders of the new entity. Why would Railtown and AIP want to do a deal like this? They would want to do a deal like this because Railtown is kind of stuck right now, and getting this broader exposure via a bigger company like AIP is good for them. It brings revenue onto the financial statements, which they don't have right now. And for AIP, it gives them access to a publicly traded company to raise more money and further grow the new entity. And that is a win-win for both of these companies. How it affects you as a current shareholder is less clear to me. But in that first scenario, it would appear to me that it would be massively diluted to current shareholders. And that's a discussion I think worth having. The other option that I talked about, the one here in blue, third-party financing, debt financing, bonds, PIPE, I'm going to give you a little more color on that in this slide here, today's video. This would be a less dilutive solution, at least initially. Third-party financing being a combination of one or more of these following things. PIPE, which is private investment in a public equity, debt, or a milestone-based earnout. And as we know from the press release issued back in February, the company has hired Canaccord to help facilitate this transaction, and Canaccord is likely being brought on to facilitate a PIPE investment or selling some debt for the new entity to help get this deal done. I said earlier I would talk about why is this deal taking so long to move from a MOU to a LOI. It could be that Canaccord is having to do a lot of work in the background to get the due diligence done on AIP, get all the financials, and then find investors for a PIPE or investors for debt. That could be taking some time, and that could explain why this is taking so long. And that is why I think, maybe these are 50-50 type outcomes, or maybe even the third-party financing outcome is maybe even the higher probability way that it gets done, since Canaccord has been engaged. But it will still be dilutive to existing Railtown shareholders, and I've got a table to kind of illustrate that to close out this video in just a second. It will be dilutive, but less so than the option highlighted in red or purple here, the dilutive reverse takeover. So I guess if I was invested in this company right now, I might prefer a third-party financing type transaction. The PIPE investment would be still shares issued to new investors, and typically that is done at a discount to the current price. So if you're buying right now, or whatever the price is when the deal gets done, I would say it's reasonable to expect that the PIPE investors will get shares, a lot of shares, for a lower price than the current market price. That is fairly standard, and I don't think anybody would contest that statement. How dilutive the PIPE investment is really depends on what valuation is given to AIP. Is it worth half of their revenue? Is it worth 1x revenue? Is it worth 2 or 4x revenue? What is the revenue of AIP? A lot of questions we don't know the exact answers to just yet, but the answers to that question will also have a meaningful impact to either one of these scenarios and to current Railtown shareholders. How is AIP being valued, and what is the valuation? In addition to a PIPE investment, Canaccord could be trying to arrange some debt or convertible debt, which would, is not really in existence right now with Railtown, but leveraging off of what we suppose is a good financial statement from AIP, there could be room in this deal to bring some debt or convertible debt on board, which would be good from the perspective of a current shareholder of Railtown. Debt is not dilutive, but it does add some execution risk, because then you've got to assume that the new entity grows and has the cash flow to service that debt and eventually pay it off. So it would not surprise me to see some debt as part of this deal. And then the final thing is the milestone-based earnout. And that is, think of it as future dilution, future shares available to current owners of AIP based on performance, based on the new entity growing and succeeding. And that aligns incentives of everybody. It is immediately less dilutive to current shareholders of Railtown. And if the new entity is successful, then the AIP shareholders get rewarded in the future as those milestones are hit. If the milestones aren't hit, then those earnout targets don't get paid out to AIP. So this is what I mean, where it's better up front for Railtown shareholders, and it aligns everybody to drive for success in the future. The last slide that we're going to talk about, and we're just going to leave this on the screen for you to study and for folks to discuss, is how would a PIPE debt earnout milestone type deal work? And as I said, you know, that kind of really depends on what value in this deal is given to AIP. So in the first column, I have 3 different theoretical scenarios. Let's assume that AIP has $400 million in revenue. Maybe in the deal they value AIP only at half of their revenue. Maybe, as it shows in the middle, they value AIP at 1 times the revenue. Or maybe if AIP is really a strong negotiator, they say we want to get paid 2x our revenue. So there are 3 different potential categories here that we're looking at. And then there are various different ways between PIPE debt and earnout that you could finance each one of these deals. And you can see in the far right hand column the total dilution to existing today's Railtown shareholders from each one of these scenarios. Even though this is the less dilutive option, doing a PIPE debt milestone scenario versus a reverse takeover, you can still see why I'm bringing this up, because look at that right hand column. If you are currently holding Railtown and any of these numbers are close to accurate, this is still pretty substantial dilution. Once we find out the letter of intent, how all of this details are going to work out, the other thing we need to think about, besides is there dilution and how much is there, is how does the market value these 2 entities coming together? How does the market value what AIP is bringing to the table? What is its revenue? What are the profits, if any? Those are more things I just don't know. I can't tell you anything about how this is going to work out because I don't know AIP's revenue. I don't know if they have profits, and I don't know the structure of the deal. But we can still think and talk about all of these different potential outcomes, because as you can see, depending on how it transpires, it could be minimal impact. It could be substantial impact. And I just encourage anybody who is telling folks, and this, I mean, literally on Friday, I heard someone say, this play will 10x in price within 48 hours. Man, I hope if you're writing those type of guarantees to people that you have some way to back that up. And I certainly hope that comes true, that all of you make 10x your current investment in the next 48 hours, which means on Monday, I'll be watching. I certainly hope that happens. You know, if it doesn't happen on Monday, I hope that the market values this deal greater than whatever you have invested. But I don't see a way that this deal gets done without significant or some dilution to current shareholders. You know what happens when companies dilute? If the float goes up 100%, you can expect the price to drop 50%. If the float goes up 500%, you can imagine what happens to the share price. These are risk management things for you guys to decide. I don't care if you invest in Railtown, and I hope you are wildly successful. But I'm just not seeing anybody talk about this. In fact, I'm seeing a lot of purposeful avoidance of it. And were any of these risks to actually transpire, I fear that there are going to be people caught unaware that these were even possible outcomes. And I think some discussion should happen. And I hope you guys feel the same way. And I hope you encourage that discussion with the people promoting this stock. If you have any questions, let me know down below. I'm Tony Denaro, and I will see you on the next video.